What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. This is your home show where, for 9+ years, we've been providing education and options on what is or will be your most valuable asset, your largest investment, the home. This is your home show. If you're new to the show, welcome to the Gumbo Nation. Jump on in. We think you're going to enjoy it. Hey, if you want to join the show, the digit's 504-260-0995, or you can shoot an email at info@mortgagegumbo.com. On the show today, CPI numbers came out this week. We're going to talk about that, going to break that down. What happened? CPI is basically the Consumer Price Index. This is what the Fed uses to measure inflation, you know, that 2% target rate they're looking for. Got some great questions over the Rue newsletter. Hey, listen, if you want to find out and stay in touch with what's going on with the show, go over to Mortgage Gumbo. Click on the Rue and sign up for our new Rue newsletter. Over 15,000 people every week. It's not a bunch of propaganda. Hey, it's a weekly newsletter that goes out every Thursday. Just keeping you updated, letting you know what guests are coming up, featured listings, different things like that. We got some questions this week from that will get answered. Pre-qualified versus pre-approved. Rates are falling. People are starting to get active. We're going to explain the difference. Pre-qualified versus pre-approved. They are not the same. We're going to break that down. And then rates, mortgage rates. So important, right? But how are they determined? How are mortgage rates determined? And I'm going to explain why it's so much more than you calling going, hey, what's your rates? Right? And why when you do that and somebody gives you that answer, they're really sort of misleading you. Okay? And we'll talk about that as well as we go along. So, hey, just some of you know this, and but February 3rd, Crew of Mad Hatters, the Bayou Charters float, be letting you know. But Float 16 out in Metairie, that's also doing Family Gras. So excited to be riding in that. This will be our 4th year to Bayou Charters. It's going to be float number 16. So as we get closer, be letting you know which side we'll have some throws and, you know, make sure you hit me with a dad cam so I could hook you up in that regards. Hey, weather's going to be getting a little poopy, right? Looks like it's getting a little poopy in the beginning of the week. So make sure wrapping those pipes, those plants, get those pets in and all that. So that's my my PSA.
That's the technical term, poopy?
Poopy, yeah. Well, it's going to be poopy, yeah. So
gotcha.
I'm sure. So parents prepare because I'm sure schools are going to be getting canceled, right? You know, so start getting those babysitters.
Oh,
right?
I didn't even think about that.
Right, Dave? You know, I mean,
man.
Yeah, I mean, dude, it's you know, school's going to get canceled, all this kind of stuff. So prep for that. As we head into the new week, because, you know, that's what we do in today's day and age. So it is what it is. So CPI came out this week, and this is the Consumer Price Index, Gumbo Nation. And this is what the Fed sort of uses to determine where is inflation at. You know, we've been talking about the Fed and Powell, their target rate of 2%. Remember, and all I've been saying over the last years, I don't know where that number comes from. I don't know why. I mean, nobody can explain anything on it. But 2%, we want to get back to 2%, 2%, 2%. That's not happening, okay? You know, not anytime soon. But again, what's amazing is how that target rate of 2%, now that we're in the election year, what's going to happen, right? What are we going to see? So the Consumer Price Index came out this week, and bottom line is, you know, inflation stayed about the same. It did not go down, right? The target of 2%, it was at 3.4 the month before, still at 3.4 this month. So didn't go down, stayed about the same. Well, why is that important? Well, number one, it shows that the inflation number here, there's no panic button anymore, right? The market is starting to build in. Now, the market, listen, the market is building in 5 to 7 rate cuts next year. I don't see that. I do not. I said last week, put me down for not seeing a rate cut in March with the federal funds rate. But what you're seeing now is this inflation data. What I'm looking at is it's showing that it's going to keep mortgage rates alive to get lower. And let me kind of explain why. And if you're new to the show, look, I'm all about providing information, educating you, options. So we've talked about this a lot, and mortgage rates are based on the 10-year Treasury. That's kind of what they go off of, okay? Rule of thumb has always been, you look at what the 10-year Treasury is, you add 1.75 to that, and that is usually what your 30-year fixed on a conventional loan. Usually that's about the range that the 30-year conventional note's going to be in, right? So if you look at today, right, yesterday the market ended, the 10-year Treasury was at 3.941. Well, if you add 1.75 to that, that's 5.691, okay? 30-year convention, I mean, obviously we'll talk about this in Rate Watch, the 30 years, 6.69. So it's 100 basis more than where it should be. Here's why I'm excited about that. Because that 100 basis points there, Gumbo Nation, that's room for us, even without the Fed making any kind of cuts, there's room for improvement, right? And mortgage rates follow inflation. They do not follow the Fed making their rate cuts. So that's why when you see a 100 basis point difference there, as that starts to close the gap, that's going to create lower rates, which is going to create opportunity, even more so than what we've seen in the last 30 days on where rates have dropped from. So that is, for me, when I look at the CPI coming out, you start looking at that, that's what I'm measuring to see that, hey, we still have some opportunity without the Fed cutting rates, right? So the upside for lower rates is really, really good. And I think that's why you're seeing, listen, in my humble opinion, I could tell you this, based on the volume that's picking up, and this has been pent up. We talked about this over the last year and a half. This is just pent up. People want to buy. There's just not inventory. Well, this little drop in rates that we've had over the last 30, 45 days has people stretching out, right? They're kind of getting excited. You throw that in with it being a new year and goals and all that kind of stuff. Well, that pent up is you're starting to see this activity that's coming out. And that's why I truly believe the spring buying season is already upon us. It's already upon us. And that's why waiting, again, the longer you wait, the more competition is coming into your market. I've already started to see folks who are asking above listing. We're writing contracts up where, hey, listen, we've got, a clause in there where, hey, it will, escalation clause. We help the buyer win that this week, right? So there's a lot of different things. So now more than ever, as you're moving forward, you want to make sure that you are working with somebody that can help you win, right? You've waited a while to be able to purchase a house, right? And now you're ready to get into this game. You've got to be prepped. That's why we're going to kind of talk about pre-approved versus pre-qualified later on in the show. But the good news is, as this data comes in with the inflation, right, I think you're going to see mortgage rates, again, it's a baby roller coaster. It's not going to be a deep dive. You're going to see some ebbs and flows on this, okay? But you're going to see them start to slowly go down. Slowly go down. And then I think once the Fed starts getting involved with the rate cuts, which I'm thinking probably May, June, something like that, then you're going to even see more opportunity, because then guess what's going to happen, right? Then you've got your buying power may increase a little bit, right? Because now, hey, some of those credit cards, all that stuff, those payments get cheaper. There's opportunities there, right? Because when those rates go down. And that's why, listen, every February, just kind of a precursor here, every February is always, it's credit month. Every February, every show in February is going to be all about credit. So you want to make sure you set your, reminders or whatever and get those questions in, because we're going to be explaining how to get rid of debt. How does credit scores happen? Because we like to do that in February, because then we got you prepped for that spring buying season, right? And it's no secret, guess what's starting to hit in January? All that Christmas, that awesome Christmas when you were the greatest person on earth. Yeah, well, now you get that bill in the mailbox and you're like, do I really love those people that much, right? This is crazy. So we're going to talk about that in February. But the CPI, like what we're seeing here, and activity is starting to pick up, especially on that refinance side as well, especially on that refinance side. So opportunities are there. You don't have to make sure, you don't have to be held hostage. Don't live in purgatory with that low mortgage rate you might have gotten 20 and 21, right? Let's show you the opportunities, and you can do that by just going to Snap, Send, and Save Dadcam. All right, on the other side of the break, we're going to get some questions answered for you, and still to come on the show, pre-qualified versus pre-approved. One word change there means a whole big difference there, and then how a mortgage rate's determined. You don't want to miss the rest of the show. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
We're still having fun, and you're still the one. You are still the one that makes me shout. Still the one that I dream about.
And we're
Still having fun, and we're still the one.
That is a song that has like been in the back of my head for like, I don't know, forever. I don't know where I first heard the song.
Yeah.
But like I don't know why. It's always, for some reason, like you start humming a song randomly every now and again. It's that song. I'm like, where the hell did that come
Really?
from? I don't know why, man. No idea. And like the band Orleans, maybe that's why.
Maybe subliminally.
Maybe. Or I could be psychotic. Who knows?
Well,
You
don't
gotta
ask
be
questions
off
you don't
on
want to
your
know.
radio.
Don't ask questions you don't want to know the answer to, Dave.
All right, 2 minutes.
Yep.
Minute.
we're still having fun.
10 seconds.
Well, I love a rainy
Oh, yeah.
night. I love a rainy night. I love to hear the thunder, watch the lightning when it
Lights up the sky.
You know it
Welcome back to Mortgage Gumbo with Dwayne Stein. Hey, if you want to join the show, 504-260-0995, or you can shoot an email to info@mortgagegumbo.com. Folks, the home away from the show, simple, mortgagegumbo.com or snapsendandSave.com. SnapsendandSave.com is becoming more and more popular. It always does. It's free, no cost, no obligations, just answers. Is it time to refinance? What is my buying power? No hard credit pulls. It picks up. Activity picks up, so does snapsendandSave.com. Go visit it, check it out, and get to chat with me personally on that. Hey, wrap those pipes. Poopy weather coming, so be careful out there as we head into the beginning of the week. So, let's talk about, got a couple questions here over through the Rue newsletter that these are good questions here, and I wanted to kind of answer them before we get into our rate watch. So, and how much money do I need to have extra if I own my home? Look, the biggest thing when you're owning a home, and it's called reserves, right? Ideally, at least 3 to 6 months you want to have in reserves if something happens. What I try to explain to new homeowners and first-time home buyers is this. There's no calling the landlord, right? When the AC breaks, it's on you. There's no, hey, it's hot in here, or hey, the heater's not working. That becomes your expense now, right? When there's something that goes on, right? A leak, electrical, something like that, that's now all your expense. So, you want to have yourself 3 to 6 months of reserves. It's not mandatory. Like, it's not something that, hey, don't buy a house because of this or that. I mean, we do loans for folks who don't have 3 to 6 months in reserves, but that is a nice to have if something happens, right? And people go, well, hey, if you lose your job, look, if you lose your job, we got bigger fish to fry. We're going to figure something out there anyway, right? So, but you're going to have these added expenses as a homeowner, right? So those are the things that you've got to look at and kind of plan for, those unexpected expenses, right? Like, hey, again, AC is a big one that comes up quite a bit, right? So another question here is, how do I know what is the best loan for me? It's going to depend. You can do all the research in the world, Gumbo Nation. But at the end of the day, you got to make sure that you're working with a lender that's looking out for you, okay? And that's why you've got to make sure that you're separating yourself and you're working with somebody who has options. Because some lenders will put you in what they think is best for them, right? So how do you know what loan is best for you? Well, I mean, there's a lot of different factors that go into it. I mean, we're going to kind of talk about it a little bit later when we talk about how a mortgage rate's determined, but the same thing. The best loan right for you is going to be determined on, your situation, right? How much down payment? Are you a veteran? What is your income? So that is where it's very important, and that is where using the Snap, Send, and Save and finding out and letting, you want your lender to kind of break down. The biggest thing you want as a home buyer, you want options. You want somebody to provide options for you, right? Let me know what my options are, right? If you got a lender that's just trying to jam one certain thing down your throat and not providing you with options, then you got to be a little bit wary there. Had a client this week who, lender was trying to tell them, you got to put down 20%, put down 20%. Came to me, showed them how to put down. Look, and the easy thing would have been, yeah, they got 20%. Let's go have them do it. But when you come to Mortgage Gumbo, we're going to provide you with options. And I showed them. We know there's not a person right now that's in my pipeline, that's listening to the show, that's thinking about buying, that's going to buy anytime this year, that is going to keep the current payment they have for the next 30 years. Not one of you. Not one of you. Which is why I've been telling you, buy now, because you can always refinance. However, so my big thing is, so for this particular client, we showed them how to put down 10% versus 20%. And on this particular loan, it was $33,000. Now, well, the payment's higher. Listen, I can't give you a loan. Gumbo Nation, I cannot give you a loan that you cannot afford. Okay? Just like when you get pre-approved with us, what you can afford, what you want to pay is two different things. Same thing when it comes to loan. I can't give you something you can't afford. So is the payment higher on 10% down versus 20%? Yes. No matter what world you live in, the payment's going to be higher if you put down less money. However, when we know we're going to be refinancing, we know we're making this as an investment, right? We understand that buying a home is a wealth building tool. Then we show you how to take advantage of that. And that 30 grand that they're going to save, they're going to put that in a bank, draw the payment out of that, and then guess what? When the rates fall and it makes sense to do the refinance, then guess what we're going to do? Then we're going to put that money towards the forever loan, so to speak, right? Then we'll buy a ton of discount points, or we'll look at what the options are at that point that makes more sense. But as you sit here and listen, or you know somebody that's in that home buying process, or are they getting that advice? Or are they working with somebody that's just a drive-through? Right? So you've got to make sure that you're working with somebody that has your best interest at hand. And who's going to be here through all this? These have been some tough times. And, you know, hey, people are going out of business. People are switching companies left and right. And people are in survival mode. But it's not your job to make sure that they keep their lights on by giving them a loan that's best for them. You are the boss. You're hiring that person. So keep that in mind. So how do I know, to circle back around, how do I know what's the best loan for me? You've got to get real, and you've got to provide, and get those options and look at what you qualify for. Now, sometimes you're going to be down, hey, if you just went bankrupt or you're self-employed or different things like that, then, you know, you're going to kind of be, but you want to make sure that you're working with a lender that could put you in those different programs. They're not, a bank that you got to put down 20% or else, right? So you want to know those different things there. So a couple great questions there. Again, hey, go to the mortgagegumbo.com, sign up for the Rue newsletter, or you can always just submit it to info@mortgagegumbo.com. All right, let's get into our weekly segment we like to call Rate Watch. All right, folks, when it comes to mortgage rates, hey, listen, we're kind of staying steady, and I'll take it. I'll take it. It's, it's a number that we're hanging out in a place that I think we're going to be in, and we're going to see some good, some bad, and are you going to be prepared? Are you going to be ready to make those decisions when it's time, right? 30-year conventional last week, 6.75. This week, 6.69. 15-year. 6.01, 5.95 on a 15-year conventional. FHA, 6.16, 6% flat this week. Jumbo, 699, 698, so flat there. VA went from 6.17, 6.02. 5-1 arm, 6.20, 6.19. So, again, like I said with the rates, they're staying. None of this here is gigantic impacts on where you're going to see big rate changes, right? Where you're going to see that on a rate sheet, so to speak, or a difference in what your qualifying rate is. But what I like I said, when this stuff came out and the inflation numbers and all that stuff where it was, in the past, these numbers, based on what that CPI staying the same or going up a little bit, we just saw rates creep up as well. The market's starting to adjust for this, okay? Again, where do I think the market's wrong? I can't see 7 rate cuts in this year. I just cannot see it unless they are just pulling the plug and just all in and politics just takes over and go from there. What I do see is probably something around April or May, and then going from there. And then from there, you'll be able to starting to see some things dial in, and then maybe a little bit of that roller coaster stays on that downside a little bit longer before it plateaus out. So we'll see as we move forward. All right, folks, stick around. On the other side of the break, when we come back, pre-approved versus pre-qualified. Sounds the same, but it's not. And it also still become rates. How are they determined? A lot of great show left. If you want to join the show, info@mortgagegumbo.com or 504-260-0995. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein on iHeartRadio. Hey, some chilly weather is coming in. Wrap them pipes. Take care of those pets. Plants. All that kind of PSA stuff. I'm doing my part. It's up to you from there. You know, keep that water running. Got to remember to do that at my buildings. Make sure that stuff gets handled. Hey, home away from this show, mortgagegumbo.com. If you want to find out, you know, I just want to know what my buying power is. Should I refinance? And I don't want a whole bunch of high-pressure baloney. Folks, snap, send, and save. .com. Snap, send, and save. .com. All right, let's talk about pre-qualified versus pre-approved, okay? And home sellers, this is for you to make sure that you're listening to as well, because a lot of you have realtors who will accept a pre-qualification, which is not worth the paper it's sent on. And there's a tremendous difference. And it seems like they are not interchangeable by any means. And the reason why I bring this up is, you know, you go take your home off the market, and with a buyer who's truly not approved, what is that costing you, right? We've talked about a lot of folks who are selling right now. You kind of fall into that 4D category, right? Divorce, debt, death, distance, having to relocate. So the last thing you want to do is get to the closing table or, you know, get the old 1 week out or whatever it is and find out, hey, sorry, not qualified. And I see this all the time. And regardless if it's because maybe a lender doesn't understand, the lender maybe doesn't have that program, it doesn't matter, right? And for realtors, or you using a lender that helps you out, or you using somebody that just has you out on the weekends, basically being a chauffeur or an Uber driver. To me, I kind of respect my realtors and my partners a little bit more than that, right? And that's why, for me, I require a little bit more, right? I am not somebody that is just going to go out and give you a pre-qualification letter. It's not going to work because I take a little bit more pride in my business and my reputation, and that's why, hey, folks like you use me and send your family over and stuff like that. So in a nutshell, and listen, if you want to go into in-depth on this, go to mortgagegumbo.com, click on loan info, and on a Dropbox, go down and click. We have a whole section about this because this is how big of a deal it is. And a pre-qualification is you simply calling me going, hey, look, I want to get pre-qualified. Okay, well, how much money do you make? I make $100,000 a year, and my credit score's in the 700s. Okay. And I want to buy a $300,000 home. All right, well, $100,000, you should be able to afford a $300,000 home. Right? 700 credit score, you should be good. That's a pre-qualification. You could see why that's not worth a poop. But that is a simple pre-qualification, literally. Hey, Dwayne, can I get a pre-qualification for a house, $300,000? The buyer been at their job a couple years and make $100,000 and their credit's in the 700s. I need a pre-qual. They're going to put down 3% first-time home buyer. I need a letter. Here's the address. Okay, that's it. So sellers, are you accepting that? And then you've got the pre-approval, which is what we do. And a pre-approval is, hey, we need to get an application. Right? Because that same person that makes $100,000 a year Well, how much do they write off? Do they have a business where there's losses? Right? That 100 grand, they've been there for a year and a half. And in their mind, they do make 100 grand. But is some of it bonus income? Commission? Is it commission only? Those are the things that you've got to get into and dive into. Because maybe that person that makes 100 grand, really, it's 70,000. It might be 95,000 after. But if they were pre-qualified on 100 grand, 95 is not 100. Now, maybe they don't qualify. Well, now they got to put down more down payment, which then what? Affects your rate and all that. We'll get into all that stuff. So the big thing there, folks, is understanding the pre-approval. What you really got to ask yourself is this. And when people call me, this is the first, like, are you really serious right now? Or is it hey, I just wanted to call and see, what are your rates right now? Look, are you serious about buying a home? Because if you do, this is a little different than being at the grocery store, getting a quarter from mom and dad and going try to get the blue gumball in the gumball machine. And then you get the orange one, and you get the red one, and you just keep trying here. Right? So you got to ask yourself, are you really serious? Because then if you are, then you got to start the pre-approval process. And it is a little bit more tedious. Because, yeah, you're going to have to fill out an application. You're going to have to show some income. You're going to have to show, hey, where's this down payment coming from? But this kind of goes back to the question from Tim in Gulfport earlier is, how do I know what is the best loan for me? You don't unless you start. You've got to allow me as the lender to start gathering information. And then as we get that, then we're going to dial in that pre-approval for you. Then we're going to present you with those different options. But it's such a big difference, y'all. And I get it. Look, I understand. You want to take the path of least resistance. Hey, can I get a pre-qualification letter? Can I this? Can I that? But at the end of the day, I mean, do you want to be out there spending $500-700 on an inspection, $500-700 on an appraisal to find out that, I was just pre-qualified? And I hear it all the time. I hear it all the time when people come to me for a free second look. And they're like, well, Dwayne, how didn't they know that? In fairness to some of the other lenders is, maybe they felt the pressure, right? Like we talked about earlier in the show, folks. A lot of people are desperate right now in our industry. A lot of people took on a lifestyle in 20 and 21 that they did not see the forest through the trees. And they're trying to maintain that lifestyle or keep up with that lifestyle or avoid going out falling off the cliff. So maybe they skip over certain steps because in a desperate attempt to hope to be able to pay a bill or pay tuition or do whatever that is, keep the lights on, they overlook something. Well, that shouldn't be at your expense. Home buying is a nerve-wracking experience, but the process shouldn't be. So again, when I get these questions of, how didn't they know this? Or why are you able to get me 10% down? That was the question. I told you all about the story in the second spot there. Why are you able to do 10%? Another guy, and then the other lender is telling them that they're wrong. There's no way he can do that. Well, do you have somebody that knows the market? And secondly, do you have somebody that has the programs? You being pre-qualified with somebody at a bank versus pre-qualified or pre-approved with me, it's night and day, folks. It's like taking a knife to a gunfight. You're going to lose. 100 out of 100 times, you are going to lose. So you've got to know those things and make sure. So what I would say to you is if you're truly serious about buying a home, get yourself pre-approved. Get that application started, right? Now, look, for us, we do a soft pull for you. So there's no hard inquiry. There's no credit check. As far as no hard inquiry on your credit. We do that for you while we're in the process of getting you pre-approved, while we're gathering information. Some other lenders may not do that. And then if you want to do a hard inquiry, then that's on you. But my thing is make sure that if you're really serious about home buying, you've got to find these things out. You've got to find these things out. Because maybe there's a little hiccup on the credit, right? And a pre-qualification doesn't tell you that because there's no credit pull. And with these credit bureaus these days, the credit card, all these sites, folks, those are for reporting purposes. And we're going to get into that all next month in our credit month. But so many people think, oh, look, my credit score is a 660 and it's a 598. Well, in a pre-qualification, yeah, that looks like you should be okay. But a pre-approval is going to be different. So now maybe we go from that conventional loan to FHA. So folks, listen, go to mortgagegumbo.com, click on loan info, go down, read all about pre-qualified versus pre-approved. That one difference in qualified and approved is gigantic. Gigantic. And especially you sellers, you want to make sure that your realtor is accepting a pre-approved letter. And our pre-approvals come with a $5,000 guarantee. So ask your realtor, hey, did this couple go see Mortgage Gumbo? Our clients, every time they come to you, it's going to have a $5,000 guarantee when they're fast-track pre-approved with us. All right, folks, on the other side of the break, rates. Man, it's right up there with air and water, right? Air, water, credit. What are my rates? Rates are a number on a piece of paper. We've talked about that. Rates don't help you buy bread and milk, that number on a piece of paper. But we're going to tell you what are the things that determine your mortgage rate so you can start kind of prepping for that stuff right now. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
Yes, watching the tide roll away, and sitting on a darker bay.
Welcome back. You're listening to Mortgage Gumbo with Dwayne Steiner right here on iHeartRadio. Hey, it's Wild Card Weekend, and for us here locally, you know what that means? Nothing. 3 years in a row, nada. Wild Card Weekend. Yeah.
Sorry.
Shut it down, dude. You know, I know you used to have a sports show, Dave, and, you know, and all that stuff, man, but, you know, it's irrelevant. Irrelevant, man. It's crazy.
It's just an excuse to, like, drink a beer or barbecue this weekend.
Right.
That's it.
Yeah, exactly. Right. Just doesn't matter as much when your team's not involved. And that's becoming the norm. 3 straight years, you know. Kudos. All right. Main topic today we're going to talk about is, and again, if you want to follow up on any of this stuff, you can go subscribe to Mortgage Gumbo on YouTube. Check it out there. Over 600 videos. Listen, everything that we do, it's a library, education, and options. That's what we're here for, folks, to make sure that we are helping you with your most valuable asset. And now we want to talk about rates, right? And it's a small but powerful word, and when it comes to mortgage rates, I want to explain why, give you the whys of when people call and go, hey, what are your rates? I don't just puke out numbers, right? If you call and ask me, what are your rates? I'm going to usually say, hey, if I told you 2.5, you wouldn't believe me, and if I told you 9%, you'd tell me to go fly a kite, right? So let's find out. Let's get some information. I mean, that's why we have Snap, Send, and Save. Nobody out there makes it easier than we do with no cost, no obligation than to go to snapsendandsave.com or mortgagegumbo.com. Anyway, that's out there. So we know what mortgage rates are, and we've talked about this, and I've been doing this for 30 years. And at the end of the day, I've yet to meet that person that goes and buys bread and milk and shows them their mortgage note with the interest rate on it and says thank you when they're going through the grocery line. Right? So at the end of the day, what is a mortgage rate? Right? It's a number on a piece of paper, but it's a number that is what's used to determine your buying power. Right? And that's why over the last 30 days, we talk about how volumes picked up. Well, you know why? Because with mortgage rates dropping like they have, everybody listening, you picked up $25,000 to $30,000 in buying power at a minimum. The rates have done that just by falling. So that's where rates come into play. It determines your buying power. Right? And we're not going to get in, you know, there's all kinds of adjustable rates, fixed rates, you know, what's APR, what's up. We're not getting into that. I want you to kind of understand, you know, how are rates determined? And a lot of times it's determined before you start the process of the loan. Right? And we're going to get into the basics, then we'll get into other things. But, you know, those factors that determine rates a lot of time is, look, what's been determining them over the last year and a half? Economic data, right? I mean, economic factors such as inflation, right? Those are things. Demand, right? Mortgage prices aren't going down. Why? Because there's lack of inventory. There's demand. So when you start looking at that, people are still out buying houses right now, even though rates have been elevated. It's going to come out probably in the next 2-3 weeks. I'll be on the show telling you, hey, year over year, mortgage home appreciation went up somewhere between 6 and 10% when you had the worst year in probably in decades as far as interest rates go. So again, it's a wealth building tool, buying a home. But those factors, like I said, economic factors, demand, world strife, we talk about that. There's a lot going on out there. Don't think these things that are going on out in the Red Sea and all that aren't going to eventually have an effect on rates. But some of the basics when you're looking at, all right, Dwayne, hey, how do I make sure? How is my mortgage rate and why? You can't just call somebody and go, what's my rate? So some of the basics is, hey, credit, right? I've got a good credit score. Well, sure, that helps out. Absolutely. That does. But if you've got an 800 credit score, but you're only putting down 3%, that's different than a 800 credit score putting down 5% or 10, maybe. And I just want to put this disclaimer out there. There's no rate for a perfect credit score. So when you call me and I go, hey, well, what's your credit score? It's perfect. Okay. Like I don't go into a file and go, perfect rate. All right, this investor for a perfect credit score has this rate. There's no difference. Okay? It's all based on tiers and FICO scores. So, but some of those basics are credit. Down payment, how much? And I think and if y'all remember back in May, Uncle Joe, Brandon, came out with those LLPAs. See, everybody's kind of forgotten about that. Right? Those loan level pricing adjustments. That was a big deal. Remember, more money you put down, the bet, kind of where they were kind of hitting the folks who put down more, the higher credit scores. Well, folks, those things haven't gone away. So that's why you got to make sure you're working with a lender that shows you how to beat those things, right? Or has investors like us where we're waiving some of those. So, some of the basics are credit, down payment, term, right? A 15-year today is 5.95. A 30-year is 6.69. So term, loan type, VA, FHA, RD versus conventional is different, right? And then we're going to dig in even more, right? And some of these other factors, like we talk about, loan to value, 5% down versus 10%, right? If you put down a little bit more, depending on the loan program, will you get a little bit of a lower rate? Maybe so. Here's a huge one, property types. When you're looking at a property type, you're going to pay a better rate on a primary residence, right? And I say property type, let me call it occupancy. And on a primary, meaning you're going to live there, you're occupying that, you're going to pay a better rate on a primary than you are on an investment or a second home.
2 minutes.
So a second home is outside of 50 miles from your current residence. And then to piggyback off of that, let's say it's an investment property. Is it a condo? Is it a single unit, a double, a fourplex? So those are the kind of things that go into play. Lock periods. At Mortgage Gumbo, a lot of time we do a 15-day lock period, so we're giving you the best rate out there because we close our loans in less than 17 days. So you don't have to do a 45-day lock. Right? That's why with us, and people are understanding, they come to us, it's the investors as well. You come to us, we'll shop all your investors on your one credit. So you don't have to have your credit pulled 10 different places.
1 minute.
We have them all in one spot. So we're able to look and see what is the best interest rate for you because all the investors, everybody's different. And then escrow is the final one I want to talk about. Hey, I've got 80%. I'm not required to escrow. Is there a charge for me to not escrow? Sometimes the rate could be adjusted by as much as 0.25%.
30.
So there's a lot of things that go into rates. We help you determine how to get the best rate, by knowing the tricks and how to get you in these certain categories where you can benefit from it. Hey, go visit mortgagegumbo.com or snapsendandsave.com. Go out this week. Number one, stay warm, but go tell a friend all about Mortgage Gumbo. Till next week, Gumbo Nation, keep stirring the pot.